All right, you're there. You're at the checkout, about to finally pull the trigger on something you've been eyeing for weeks. And then you see it, that little PayPal Pay Later button. 4 easy payments, no interest. It feels like a total no-brainer, right? But what's the catch? Are you about to trade a few points off your precious credit score for that instant gratification? Let's be real. We've all paused for a second, wondering if clicking that button is a decision that will come back to bite us. Today, we're clearing up that confusion for good. So, why are we so protective over a few credit points anyway? Because that little 3-digit number is kind of a big deal. A lower score can be the difference between getting a car loan with a great rate and one that comes with painfully high interest. It can decide whether you get approved for a mortgage on your dream home, or even if you can snag one of those fancy travel rewards credit cards. It's crazy to think about, but a small, innocent-seeming money move today can echo for years. A single missed payment that gets reported can hang out on your credit file for up to 7 years. So that little knot of fear in your stomach when you look at a new buy now, pay later option, it's totally valid. But knowledge is power, and by the end of this, you'll know exactly how to use PayPal's payment options without messing up your financial future. Here's the most important thing you need to get. PayPal offers a few different pay later products, and they each treat your credit very differently. The answer to, will this affect my score, really depends on which option you choose. First up, the one you see most often, PayPal Pay in 4. This is the one that lets you split your purchase into 4 payments over 6 weeks. And here's the good news. When you use Pay in 4, PayPal usually just runs a soft credit check. A soft check does not impact your credit score. Plus, your payment history with Pay in 4 generally isn't reported to the major credit bureaus. This means making your payments on time won't boost your score, but being a little late won't directly hurt it either. Think of this as the stealth option. Next on the list is PayPal Pay Monthly. Now this is a whole different ballgame. It's for bigger purchases, and it's a formal installment loan. Applying for Pay Monthly can trigger a hard credit check, which might temporarily knock a few points off your score. Once you're approved, PayPal may report your loan and your payment history to the credit bureaus. This is a double-edged sword. If you're consistent and make all your payments on time, it can help you build a positive credit history. But if you miss payments, that will get reported and can damage your score, just like any other traditional loan. Finally, we have the big one, PayPal Credit. This isn't just a payment plan. It's a revolving line of credit, basically a digital credit card. When you apply for PayPal Credit, the lender, Synchrony Bank, does a hard credit inquiry, which will likely cause a temporary dip in your score. If you get approved, this account is reported to the major credit bureaus just like any other credit card. Your payment history, how much you owe, and how much of your available credit you're using, it all gets reported. This means PayPal Credit has the biggest potential to either help or hurt your score. Use it responsibly, and it can be a great tool for building credit. But if you're late with payments or carry a high balance, it'll drag your score down. Okay, let's break it down and make it simple. How do you decide which one to use? Think of it like this. Pay in 4 is your go-to for smaller, everyday buys that you know you can pay off quickly. It's designed for convenience and has almost no impact on your credit report. Pay Monthly and PayPal Credit are for major purchases you intend to finance over a longer period. You should use these with a clear plan. If you're disciplined with your payments, they can be a strategic way to build your credit history. But if you're not absolutely certain you can make every single payment on time, it's better to avoid them. The risk of damaging your credit is very real. The golden rule here is pretty straightforward. Never finance something you can't actually afford. The convenience of buy now, pay later should never become a long-term debt headache. So, to wrap it all up, no, not all PayPal loans will tank your credit score. Pay in 4 is mostly invisible to the credit bureaus. Pay Monthly and PayPal Credit, on the other hand, are reported and act like traditional loans and credit cards, meaning they can help or hurt your score depending on how you handle them. Now I want to hear from you. Have you used any of these PayPal options? What was your experience? Did you notice any change in your credit score? Drop a comment below and let's talk about it.